random thoughts for the day. Unfortunately, I have to drive a lot because of my current situation. I have to drive to a lot of doctor's appointments. I did 4 hours of driving yesterday to doctor's appointments. Today, I have only 2 hours. There's also all the aggravation and hassle that comes from driving in traffic in this area, which is certainly not fun. I'm trying to do a better job of giving people the simple, high level, conceptual, the basics, rather than going too deep into the details. Because when you get too deep in the details, it's less valuable. You lose people, and you tend to attract other financial professionals, life insurance agents who want to argue with you about the minutiae. But it's not really helpful for prospects and customers, which are people I'm trying to reach. Simplicity helps because when we keep the high level conceptual strategy in mind, then the details don't become a maze anymore. They're just supporting and they are secondary. As long as the strategy is working, even if it's not set up in the most optimal way, we're still making progress. So I don't want to get lost in the minutiae. It's the strategy that matters. And then the products are designed to support and execute on that strategy. But in any financial strategy, matters the most are two things: the skill of the agent or financial professional who's designing the solution, and the knowledge and commitment of the customer. That's really what matters. It's the heads and hearts that are involved in the process, both the financial professional and the customer. And then, of course, a good agent can design a product well. And more importantly, the good agent is not just about designing the product. It's about making sure the customer really understands the strategy so the customer can actually be successful in implementing. That is more important. A lot of the agents spend a lot of time talking about case design, and certainly case design and policy design. It is important. There is a skill to it. But what's more important is that the customer truly understands what product or group of products has been sold, what moves are we making, what is the overall strategy, and how do I best leverage this policy as an example. That's what really matters. And that communication is where the primary skill of good agent comes in. There are people out there, some of whom are not even agents, who work full-time for the insurance companies who have a good understanding of how the products work and how to design them. But what really matters is how do you communicate that to the customer? And it's not about communicating the product or the mechanics of the product. It's about communicating the strategy so the customer understands how that particular product fits into his overall financial picture. I'm always thinking big picture, looking at everything you have, looking at your entire financial picture, trying to optimize everything. Because as I keep emphasizing, if we're looking at whole life insurance in particular, so many of the benefits of a whole life insurance policy cannot be seen in the policy itself, but how it optimizes everything about your financial picture. You can make your investments better by using a life insurance policy to finance those investments. You can make your retirement portfolio last longer by using whole life insurance as a volatility buffer. Of course, you can use whole life insurance for the tax benefits as well. Lots of different things, long-term care protection, etc. And all these are scenarios that could be models. But I'm trying to do a better job of keeping it simple. The challenge with whole life insurance is that it can be a chameleon. Whole life insurance is a chameleon. It can be many different things to many different people. So if you show me a whole life insurance policy and ask me, is this a good policy? My response is always going to be, I don't know. Tell me about who this is intended for, their values, beliefs, their psychological makeup. Tell me about everything that's going on in their financial life. And what is the intended purpose of this whole life insurance policy? That's going to dictate how we design it and how we use it. If we're using a series of whole life insurance policies to become our anchor, because again, it's not just going to be one policy, it's going to be designed a certain way. But maybe if we're using a full life insurance policy for estate tax purposes, it's going to be designed in almost the opposite manner. So, again, a lot of different things to consider there. I believe it was Bob Castello founded the Leap model. He said whole life insurance is its own asset class. And I haven't thought too much about that, but on the surface, it seems very appropriate. It's one of the reasons why it's so difficult for us to measure and understand full life insurance, because there's not really anything else in the financial world that we can compare it to. It really is its own asset class. There are some things that can help us to understand it by way of analogy, but there's nothing out there that really encapsulates all of the things that life insurance does for you and what role whole life insurance is intended to have in your financial life. There are some reasonable analogies like real estate, but that doesn't cover everything that life insurance does for you. It is something I'm trying to get better at, trying to articulate, explain, put it into simple, clear visuals. And that's a very difficult exercise to explain an abstract concept, put it into a simple, clear visual. That's in a short form video. That's actually very challenging to be and to do that well. But if you can, then it really helps the customers to have that aha moment, to have that light bulb moment. And then they're going to be excited to get that whole life policy, not necessarily because they want to buy a whole life, but because of all the problems that is solving, all the things that it's doing. By a good way of saying it, stated by Tyler Willing, I believe, I've had on my show. He's partnered with Chris Kirkpatrick at Python, is that he'll take out a paper and draw a pyramid, and he probably articulates it better than I'm going to. But it says most people are, when they think about finances, or when you talk to financial professionals, think about financial advisors, and they're looking at the top of the pyramid, the investments, what's your investing strategy. Yeah, that's fine, but I don't really focus on that. I focus on the bottom of the pyramid. What are you doing with your safe money, your protection, your foundation? That's where I help people. That's a very useful way of explaining it, because people don't put a lot of thought into that. They might put more thought into an investment strategy, or they might have a financial advisor who does their investing for them, but they haven't put a lot of thought into the foundation of your pyramid. Isn't that the most important part? Don't we need to have a safe foundation in order to support those investments? And shouldn't we have more money in safe places than in risky places? That, of course, is up to you. Depends on your risk tolerance, a lot of other things. But I think all of us would say we're going to keep some percentage of our money in safe money. And that's a good way of talking about it. I also like talking about it in terms of cash flow. So I don't want to talk just about where is your money sitting, but how is your money moving? Money has to flow. It's like water, it has to flow. So how is money flowing? Is money flowing away from you on net, or is money flowing to you on net? As Robert Kiyosaki would say, don't work for your money, make your money work for you. The way in which we do that is by trying to optimize and increase your cash flow. So in addition to the pyramid analogy, parallel in conjunction with that, you could also look at it from a cash flow perspective. You can imagine a process diagram. You're talking about investing your money. Back up a step in the process. How did you come up with the money to invest? Where did that come from? Let's back up a step. How are you financing those investments? Because every time you make a purchase or an investment, there is a financing decision. As an example, if I go and make a consumer purchase and I'm smart, I'm going to use a rewards or a credit card to make that purchase so I can get a 2% back or travel points or whatever. I'm going to get additional benefits. It's not just about the decision to buy something, it's about the decision of how do I finance that. And when you think of purchasing a whole, this is where people put more thought into it, because it's a very large purchase. So if you're going to make a $500,000 full purchase and you're looking at a 30-year mortgage, the difference between, say, a 6% and a 4% interest rate on that mortgage can be pretty dramatic in terms of how much it costs you over 30 years. So how do we optimize that? And this is why real estate investors oftentimes understand, have an affinity for the infinite banking concept, because they're always thinking about financing. When you're making large real estate purchases on a regular basis, financing is a critical piece of the decision. It's not just what am I buying, but how am I making that purchase? We want to think about financing across our entire financial life. You're putting money into your 401k, into mutual funds and index funds. How are you financing those investments? Most people are just paying with cash, and that's fine. That's one way of financing it. What might there be better ways of financing these, where you can get some additional benefits? Just like you make a purchase with rewards or any credit card, now you get some additional benefits without changing anything you're doing, without changing the purchase you're making. What if we could do a similar thing with your investments and with everything in your financial life, where with every purchase and investment you make, you can finance it from your own private bank, where now you get some additional benefits similar to the rewards or your credit card now. So instead of paying cash, what if you had your own private bank issue a loan to make that purchase? And now you, as the banker, earn interest on that loan. You still have to make repayments on the loan, but you're benefiting by so doing. You still have to make that purchase. There's no free lunch. You still have to spend the money. You're just doing it in a more optimal way, where now you pick up some additional benefits. The interest and dividends that you earn on that whole life insurance policy, the death benefit protection, the long-term care protection, tax benefits, etc. So make the same purchase, make the same investment. Just think more about how am I financing and everything in my financial life. And if I can gain some additional benefits, earn even a little bit of interest with every single dollar that I'm spending or investing, that can add up over time, because the volume of capital that's flowing through your personal economy is quite a lot if you think about it. If you're 35 years old and you make $100,000 a year, what that means is over the next 30 years, even if you get no raises, you just make the same 100,000. But over the next 30 years, $3 million is going to flow through your personal economy. How much of that are you going to spend? What if we could recapture even a fraction of that? That can add up to easily 6 figures worth of benefits if we can recover even some portion of that. And that is what the infinite banking concept allows us to do. On our investments, we can gain some additional interest because we're benefiting in the investment, and we're benefiting as the bank that financed the purchase of that investment. So the rental property, the house, and we also own mortgage. And then when it comes to our purchases, we'll make those same purchases, but now we're going to get some additional interest back on the loan that our private bank issue. Not to mention the intangible benefit of having control over that financing function, not having to get permission from a bank to take out a loan and having to deal with the bank's terms, but being able to set your own terms. So we want to think about it in terms of financial efficiency. We want to think in terms of cash flow, and we want to think about building the foundation first before we get into investing. I've done a lot of speculative investing. I've done a lot of research on it. I've run and purchased and followed investable newsletters. There are a lot of things to be said about investing, and investing can certainly be a great way to grow your wealth. I would just encourage you to think about building your safe foundation and building your cash first, or at least as a significant part of that before you jump into investing. Because the more you have a safe foundation, the more you have safe, liquid, accessible capital available, and the more healthy your cash flow position is, the better position you'll be in to make those investments. So everything about your financial life will get better, including your investments. And then, of course, there's the psychological benefit, something that's difficult to articulate, but I think all of us experience is that when you feel safe, financial, you make better financial decisions. It's easy to look at a financial plan on paper, but it becomes harder to execute on it if you don't feel safe, if you feel at risk. When you have that foundation with full life insurance, other insurance policies, and the cash value, building in a life insurance policy, It allows you to be more anti-fragile, to weather storms, to make better investment decisions. And so your investments will perform better because you have the safe capital to take advantage of drawdowns and to weather storms in your personal life. Might not be a storm in the economy. Usually it's going to be a storm in your personal life that causes you to not follow through your investment plan. Many of us have gone through the experience of losing a job, where you're without a job for a few months, and when you're going to get your next job is unknown. Many of us have dealt with health issues, either ourselves or a family member, a spouse, a child, parents, grandparents, in-laws, and dealing with that can be a financial and psychological and emotional drain. Having this foundation in place is going to help you to make better decisions. And then, of course, there's that death benefit. The permanent death benefit is the asset. That is that guaranteed future payout. And that is the asset that underlies everything. So whole life insurance policies grow cash value. There's an enormous amount of benefits that flow from them that I've mentioned. But the source of all of those benefits is that future guaranteed payout, that permanent death benefit. And I've had clients tell me the peace of mind that it brings them, knowing that if anything happens to them, their family is going to be taken care of. And I need to get better about having the conversation about human life value, really understanding why more death benefit than you probably think, why you should have more death benefit than you probably think, changing the paradigm. I oftentimes hear people say that, oh, I'm taken care of. Oh, I've got plenty. I'm not worried about that. And I need to do a better job of asking the right questions and having a conversation. Maybe you are taken care of. That would be great. If you have the appropriate amount of death benefit, and I'm not talking about whole life insurance, just the term is fine. But having that conversation around human life value. Because I have never once met a single person who was properly insured with life insurance. I've definitely met people who had life insurance, term and whole life, and universal life as well, and had met with life insurance agents, had met with financial professionals, and still did not have enough death benefit that would have been appropriate for their situation. I have not seen it personally, but I have certainly seen it where you think $1 million, $2 million, $3 million, whatever the number is, you think that's enough. Let me tell you what your human life value is, how it's calculated, and why you should secure all of them. And of course, what I find is people who are open to that conversation very quickly understand why they should have more death benefit. Again, I'm not talking about full life insurance. I'm not talking about infinite banking. I'm just talking about getting your family the appropriate amount of protection. The only nuance I would add is just make sure it's a convertible term policy. There's a lot of nuance around that conversion privilege. A convertible term policy protects your insurability because you have the option to convert it to whole life no matter what happens to your health. So it protects your current health rating, keeps all your options on the table. And of course, with convertible term, the question is, what is it convertible to? There are lots of convertible term policies out there that, in my opinion, the conversion privilege is not worth much because you cannot convert it to a good competitive product. There are actually a very small number of companies that have a convertible term policy where you can convert it to a good quality, competitive whole life product, and they do not limit the conversions. So there's a lot of things to consider there. Not all convertible term policies are created equal. There can be quite a lot of variance there, quite a lot of nuance. But make sure you have enough death benefit. How much death benefit is enough? Schedule time with me. We can talk about your human life values. And I can tell you, because that is usually the first step. After I get all of your information and give you all the recommendations for improving your financial life, the first step usually is applying for a convertible term policy. Notice I didn't say signing up and paying for a convertible term policy. I said applying. We're just putting you through the application process. We're not signing up for anything. The insurance company is not signing up for anything. And we can kick off that process in parallel. So while we're going through case design and having a conversation, the life insurance underwriting can do its thing. And that can take a month or more easily. So that's why we want to kick off that process as soon as possible. We're not signing up for anything. We're just applying for the maximum death benefit in convertible term. And then the insurance company will tell us eventually, are you approved or not? How much death benefit are we going to give you? What rating are we going to give you? And that can be a lengthy process. That's why we're going to start as soon as possible. Keep all our options on the table. After we hear back from the insurance company, then we can make a decision as to what do we want to do? How much death benefit do we want to take? What's the ultimate solution want to be? Because this is just the first step. For some people, they just take the convertible term policy and that's all they want, and that's fine. For other clients, we take the convertible term policy, and then it's a process of converting that term in pieces over time as their cash flow and net worth grows. So when we do that initial consultation, there is a tremendous amount of value that I can add to my clients. There's so many different areas I can help. Let me just give you a few examples, and there are many. One would be estate planning. I don't do estate planning myself, but I have partners who do. And importantly, these are partners who are personally practicing the infinite banking concept, so they really understand the benefits of whole life insurance and a lot of these other strategies. So they are, in my opinion, better estate planning partners than your standard estate planning teams. And they'll have that conversation with you and explain to you how the process works, what it's going to cost, what might make sense for you. Whether you move forward with the estate planning or not, they'll have a really good idea of what's involved and what it will cost. And they do a good job with the follow through, making sure the estate plan is properly executed, put in place, set up, and that everyone who needs to be educated is educated on that estate plan. That's critical. I've saved people so much money, and it's hard to articulate it, but as an example, on the health insurance side, I'll take a look at your health insurance, even if you have employee-provided health insurance. I've saved people money who had employee-provided health insurance. I have multiple partners where we can look at health insurance and health sharing. I've saved families thousands of dollars in health insurance premiums by moving them off of employer-provided health insurance to health sharing. And there's a lot of intangible benefits that come with that too, because it gets you out of the insurance system and you can then get better quality medical care and better quality doctors. Even with your current health insurance, I can improve it. At the very least, you can make me your agent on your policy. So maybe nothing changes about your health insurance, but now you have an agent that you know you can call when you have a problem filing a claim, you have a problem getting insurance to cover something. We can help you with that. We can help you get those prior authorizations or whatever you need to get these procedures approved and paid for by health insurance. If you're someone who doesn't have a lot of income, that can be a great time to get health insurance. You might qualify for a fully subsidized plan. I've done this for multiple people where they were without a job or for whatever reason, they were going through a financial hard time. That's a great time to apply for health insurance. In most cases, I was able to get them fully subsidized health insurance plans, so they're not paying anything out of pocket. Or they might be paying $11 or $12 a month for a plan that would normally cost hundreds of dollars funding. Or you might even qualify for Medicaid or other programs that are out there for people who make little or no income. So come talk to me about it. Don't wait until you're wealthy. Don't wait until you have the cash flow. Don't wait until you have the job. Talk to me before, because there are actually great opportunities we can take advantage of while you're unemployed. And then if you do get income of some kind, you can continue with that policy through the end of the year if you want. And that's something that Brad Owens and I and other partners that I have can help you to navigate. I am not securities licensed, but I have partners who are. We can review your investment portfolio, take a look at it. One of the biggest values there isn't so much that we're going to make your investment portfolios better, but I think we do a much better job of coordinating your investments with everything else in your financial life. Your investments shouldn't live on an island. They need to be coordinated with everything else, with your insurance policies, with your savings, with your cash flow situation, with where your safe, liquid, accessible capital is, hopefully in a cash value life insurance policy. We can coordinate those together and give you a better overall financial picture without necessarily getting you a better rate of return in your investment portfolio. One of my partners does more investment portfolios that are geared more toward yield, rather than rate of return. So if you're trying to generate income from your investments, which in my opinion should be the goal in most cases, what if your investment portfolio started yielding you a lot of passive income? Wouldn't you rather have that passive income than just some rate of return where you're building a nest egg? Both are good, of course, but I think the income is more concrete and more useful. And if you want to reinvest that income, of course you can. You can keep reinvesting it. We can look at your mortgage, your housing payment. We can look at making strategic use of the equity in your home. Maybe taking out a second position home equity line of credit. We can help you find the best one where you'll have a low interest rate and the best possible terms. We can look at maybe even refinancing your mortgage into a first lien HELOC, if that makes sense for you, where we can save you a lot of money on interest and get you access to the equity in your home, which you can then use for all kinds of strategic purchases and investments.